Welcome back to Money Mastery Hub, where we explore all things finance to help you achieve your financial goals today. We've got a crucial topic on the agenda, your credit score. If you've ever wondered why it matters and how to improve it, you're in the right place. Stick around because, by the end of this video, you'll have a clear understanding of the importance of your credit score and actionable steps to boost it. Let's dive in. Your credit score is more than just a number. It's a financial passport that opens doors to various opportunities. Whether you're looking to buy a home, get a car loan, or even secure a job, your credit score plays a significant role. Here's why it's so important. 1. Access to better interest rates. A higher credit score often translates to lower interest rates on loans and credit cards. This means you pay less over time and save money. 2. Loan approval and mortgage rates. Lenders use your credit score to assess your credit worthiness. A good credit score increases your chances of loan approval and can lead to better mortgage rates. 3. Credit card approval and limits. A strong credit score improves your chances of being approved for credit cards. It also influences the credit limits you may be offered. For employment opportunities, some employers check credit scores. As part of the hiring process, a good credit score can enhance your job prospects. 5. Renting a home. Landlords may consider your credit score when renting out their property. A higher score can make it easier to secure a rental. Now that we understand why our credit score matters, let's talk about how to improve it. Remember, building good credit takes time, but these steps can make a significant difference. 1. Check your credit report. Regularly review your credit report for errors. Dispute any inaccuracies to ensure your report reflects accurate information. To pay your bills on time. Timely payments have a substantial impact on your credit score. Set up automatic payments or reminders to avoid late payments. 3. Reduce credit card balances. Aim to keep your credit card balances low relative to your credit limit. High credit utilization can negatively impact your score. Diversify your credit types. Having a mix of credit types, credit cards, installment loans can positively influence your score. Don't open new credit accounts unnecessarily, but diversify when appropriate. 6. Be cautious with credit applications. Each credit application results in a hard inquiry. Too many inquiries in a short period can lower your score. 7. Negotiate with creditors. If you're facing financial difficulties, consider negotiating with creditors. They may offer repayment plans or settle for a lower amount. There you have it, folks. Your credit score is a powerful tool that can shape your financial future. By understanding its importance and taking proactive steps to improve it, you're investing in your financial well-being. If you found this information helpful, don't forget to give this video a thumbs up, subscribe for more financial tips, and share it with friends who might benefit. As always, thank you for tuning into Money Mastery Hub.